Hey, good afternoon, everybody. Again, this is the continuous crude oil chart, and just to update it here week to week. As you can see, again, when we did take out this long-term downtrend, it was a strong week higher. We finished right at the highs of that week. We also closed above the short-term downtrend as well. Now you can see that the support from that short-term downtrend is still holding, but we have stalled out here recently on our gains. One thing to notice is that out of all these lows that we've made, and even a few jabs through $70 a barrel, we haven't closed below $70 a barrel all year long. So if we do see a failure here and a retest of some support, we still feel that that would be a buying opportunity. This is the December contract. We're going to be looking at December as our front month later in the week. And right now, the $85 a barrel area has stalled out this rally so far, which is 62% retracement of the May high to the May low down here. And we are seeing a little bit of a double bottom that we had on this morning's low, just above $81 a barrel. So right now we're in a pretty good $4 range, and we're going to continue to possibly chop around in that range until this market has a little bit more confidence as far as how this further round of quantitative easing and move from the Fed is going to affect the economy. So just as crude oil was making new highs late in the day, so was the stock market, and we're going to continue to have that basic correlation. At the same time that we've got all this going on, we have the French strike, and they're striking over there based on the pension reform, and that is keeping some fundamental support in the market at this point as well. Recently it's been high domestic inventories. That's been more of a bearish tone for the fundamentals, but for the short term, while these guys are striking, that is going to keep a little bit more need for some of our products. So the market's expecting that U.S. exports will be up and imports will be down, so more of this stuff going to Europe at this point. Now, if this market cannot break through 85 with this short-term bullish news, then we do feel that this market probably will fail at 62% and go back down and test some deeper support. So Allendale is short right now with a stop on the November contract just above the current high for the move. And later in this week, if we are not stopped out or at our profit objective, we will roll to the December contract. On the dollar index here, you can see that we're in a very well-defined downward channel. And just recently on today's trade did we manage to poke above this downward trend line here. As you can see, when I took the snapshot of the chart, we were actually back below that trend line. So as of right now, it looks like a lot of these other little fake outs where we went up, ran some stops, and then turned around and headed lower. So if we find ourselves later in the week back down near these lows, we're going to say that this downward channel is holding. And again, kind of what we said on last week's commentary, not really going to get excited about buying this dollar index until we take out the day where we had this key reversal. And again, we opened above the previous day's high and closed below the previous day's low. So we're watching that high as a point to either sell against in the short term or be a buyer if we can move through that high.